Hello all, I am Dr.J.Pavithra, Associate Professor, Department of Management Studies, School of Management and Commerce, Bharat Institute of Higher Education and Research, Chennai. In this video, we are going to discuss on the Introduction to Financial Accounting. So in this, the basics of accounting, we are going to learn the difference between the bookkeeping and the accounting, whether the art and science, accounting is treated as an art and science, the objectives of the accounting, the various branches of accounting, the nature of accounts, and the double entry systems and its roots, various accounting concepts, and the uses of financial informations, and then the advantages, limitations, the various recording of the transactions for the accounting like the journal, ledger and the trial balance. Let us move on to this meaning of accounting. So accounting, what is the accounting? It is being stated as the art of recording, classifying all the various business transactions so that are going to be taken place, and we are taking the various expenses and the incomes and the payments and the purchase of sale of goods as on credit or on cash basis. So all the items are to be recorded in the accounting records. Here it is going to be the transaction always going to be in a monetary terms, and the art of making the summaries and analysis of the accounting transactions are going to be important, and various communication of the results of the performance of a business are to be communicated to the external and internal stakeholders for the decision making. So various accounting as an art and science is there. As a science, so it is going to be measuring about the economic results where they are identifying and classifying the various types of accounts so that the method of double entry system is going to be recorded so as to keep up the bookkeeping system. See here the accounting is being treated as a science which is given as a set of rules, as we are stating about the general accepted accounting principles gap, and then various concepts and conventions and being prepared as a principles to be followed. However, accounting has been taken as an art. So it is being presented so that all the financial reports and the performance are being followed and implemented towards the universal following as already stated about this gap. And here these established rules and principles will be applied in the bookkeeping process so that a unique principles are being followed everywhere. Various objectives of financial accounting are available. The first objective, to know the results of the business so that they are able to know about the whether the profit and loss or the income and expenditure account. And we are also having this balance sheet. So the profit and loss to be ascertaining about the various expenses and the incomes that are being incurred by the business, so that from the final output we are able to find out the profit or the loss of the business. And next, the second objective, to ascertain the financial position of the business, the extent of which all the assets and liabilities are being prepared at any point of time so that the proper balance sheet. So basically this income statement and balance sheet are going to be the various important measures for the business. So the income statement will prepare the profit or the loss of the business, and then the balance sheet is going to comprise of the liabilities and the assets which are going to be there for the business. The third objective, to ensure the control over the assets and important about the preventions of the various frauds and misappropriation of the accounts. So the proper ascertainment. So in this accounting we are having the various auditing like external and internal auditing. After the closure of the financial year, that is from 31st April to 31st March, after completion of the financial year, so the audited results are going to be audited by the internal auditors being appointed with the qualified chartered accountants, and then after it is to be again audited by the external auditors appointed as by the chartered accountants, and two various appropriations has to be done, but however the malpractice and the frauds should be controlled. This is the third objective. Then the fourth objective, to facilitate the proper management of cash and the surplus funds that has to be used, and proper prevent profitable verifications and deficiencies of the cash, which can be overcome by preparing for the funds from burden. Always they have to ensure what are the surplus cash that is being available for the business, and the proper utilization of the management of the cash and other records and the expenditures of the business has to be properly recorded, so that the next set of years they can be properly monitoring, so that the burden or the loss can be reduced. Next objective, to provide the required informations to the government and the tax authorities. So all the informations after the audited results has to be audited and then after given to the various users of the accounting. So here the government is also want to know about the business. Every quarterly business, the performance of the business has to be revealed, and then after completion of the financial year till 31st March. After the 31st March, they have to be auditing the accounts, and then after results are being released in the public domain. Then after they are going to be also giving to the tax authorities, as we are after introduction of the GST. So the proper audited statements has to be submitted, so for the filing of the GST returns. So far, we have seen about what are the objectives of the accounting. Various branches of the accounting are available. We have these three branches, such as the financial accounting, cost accounting, and management accounting. These three are going to be the very important objectives of the accounting and various branches of the accounting. So here there are differences between this financial accounting, cost accounting, and management accounting. So the basic objective for the financial accounting is always they are going to be recording the transactions and determine what is the financial position for the profit and loss. And in order for the cost accounting, so they are going to be ascertainment, how the cost has to be ascertained, the allocation of the cost and the accountability of the cost are going to be taken. Similarly, in the management accounting, they are going to be facilitating towards the analyzation of the financial statements, so that they are making the proper decision making. Second, the nature basis. In this financial accounting, they are always concerned with the past data. From the past data, they are able to find out the future position. In the cost accounting, they are always concerned with the both the present and the past recorded data. So the historical cost, we have the various classifications of the cost, which is going to be very important. And on the basis of these classification of the cost, the ascertainment has to be made. Similarly, in the case of management accounting, it is going to be dealing with the futuristic projections of the data, and here we are having the budgeting also given for the business purpose. Next we are, what is the principle being followed? We all know that in the financial accounting, it is being given by the GAAP, that is the generally accepted accounting principles. In the case of cost accounting, they are going to be concerned with both the certain principles are going to be followed, and then in this management accounting there are no guidelines that has to be given. Next part of the data that is being used, it is going to be of quantitative aspects. In the case of financial accounting, qualitative aspects are not recorded, and then only quantitative aspects are going to be recorded in the case of cost accounting, and both the qualitative and the quantitative informations are going to be taken, so that the proper planning, organizing, and the decision making are going to be taken towards the management accounting. And various other needs are there. The reporting frequency, So generally after the completion of the year, the accounting year, they are going to be auditing in the case of financial accounting. For the cost accounting, so whenever they need to reduce the cost, the inventory cost or the material cost or the labor cost, but then and there they can be making the changes. And then for the management accounting, they are also going to be taken as and when desired by the management needs. And the next is publication. So the publication is going to be for in the case of companies. So they are going to be publishing after the completion of the accounting year from 1st April to the 31st March. And however, in this cost accounting, all the internal details are not to be published, and also for the management accounting, the details are not published. In next one, information that is being recorded, all being recorded for the financial accounting is in the monetary terms, and then both the monetary and non-monetary information is also going to be taken for the cost accounting and also for the management accounting. What are the forms of accounts? So the accounts are going to be prepared as per the legal standards. Accounting standards are there. So the Indian accounting standards are there, and thereafter we have the international standard, that is the gap. And here in the cost accounting, they are going to be voluntarily made through the requirement of the management. Here also after the same of the management accounting, as and needed by the management, the changes are going to be made. So what is the nature of account? So we have the various nature of account, which is going to be as important. So here we are classifying the three important accounts, which is being taken as the golden rules of accounting, where we are classifying these three types of accounting, such as the personal account, real account, and the nominal account. So here in this personal account, so this is going to be representing the name of the person or the organization. Here they are given the example about Mrs. Vinita account representing a person. Sometimes it may be a company, Messrs. Bharat and Company. Sometimes it may be representing the name of the account also. So this is going to be the personal account. And then we have the next account, which is the real account. So the real account are going to be both the tangible and intangible. Tangible is which can be seen by our eyes, and intangible which cannot be seen but however felt by the organization. So here the tangible, that is the fixed assets, furniture account or the buildings account, the goodwill or the reputation of the business which cannot be seen through our eyes. And then the final one, nominal account. So all the expenses, losses and the incomes and gains are going to be represented here. All the salaries, expenditures, the salaries account or the rent account or the stationaries account, everything is going to be represented as the nominal account. And then what are the losses that are being taken or the profits that are going to be taken, that are being taken as a nominal account. Before going to the double entry system, so we have the three rules of accounting. Already we stated about this personal, real and the nominal. So the personal account, where we are stating the rule as debit the giver and credit the receiver. And then we have the real account, debit what comes in, credit what goes out. And the nominal account, we have the rule as debit all expenses and losses and credit all incomes and gains. Next, we move on to this double entry system. We have two systems of accounting which is being followed, which is single entry system and the double entry system. However, the single entry system is not followed. However, to know the two transaction aspects, we need this double entry system. What is this double entry system? So this double entry system is going to be involving the two accounts, which is giving the dual effect for the various transactions that are being recorded for the dual account. So here the process of keeping the account and accepting, which is being concept as the dual entity concept, where one account is going to be debited the amount and the other account has to be credited. So this is being taken as the dual aspect or the double entry system. All the debit are going to be taken and corresponding to that the credit of the equal amount is going to be taken here. So all the debit is going to be having the equal and corresponding credit. So one account has to be debited and the other amount has to be credited. What are the rules? As stated already, we have these rules of accounting. So what is the rules? That is the personal account. We have the debit the receiver and credit the giver. The real account is what comes in, the debit what comes in and credit what goes out. In the nominal account, we are having the debit all expenses and losses and credit all incomes and gains. Let's move on to this accounting concepts. So these are the important principles that are going to be stated as given by the GAAP, generally accepted accounting principles. The first concept, we have the business entity concept. Here they are stating that the business is always being established so that they are going to be always making towards the achievement of the goal. Here they are given the accounting equations such as the assets is equal to the liabilities plus the capital. So what are the liabilities which are to be paid by the business that are going to be taken as the liabilities. Next we have the money measurement concept. All the accounting transactions are going to be recorded only in the monetary terms. The next is going to be the going concern concept. It is stated that the business always going to be existing for a long period of time. And suppose in a extreme situation where the business is insolvent, so they are going to be concluding the business and winding up. But however, in this assumption they are stating about the period is going to be for very long and it is going to be supporting the concept by valuating the assets about the based on the historical cost. Next we are going to this dual aspect as already seen in the double entry system. Same aspect, the dual aspect of every debit is going to be having the equal and corresponding credit. So we have the giving and the receiving benefits. And next concept is going to be the periodicity concept. So we have already stated about the accounting period concept, which is going to be from the 1st April to 31st March. This is the accounting period in which all the transactions of the business are going to be ascertained. So then the next concept is going to be the cost concept or the historical cost concept, where the transactions are always recorded through towards the various amount that is being incurred and it does not take the inflation rate or the depreciation rate. Next we have this matching concept. So the matching between the expenditures and the incomes are going to be important. All the costs are going to be matching with the expenditures and the incomes. Next, we are having the realization. So the revenue can be realized at a later date and then the revenue is going to be realized when the sale of the goods are going to be made. So next we have this accrual concept. So the accrual concept is going to be of the revenue can be recognized a little later and then the cost is going to be recognized when the income is not, when the proper payment is going to be made at a later date and then only the income is going to be realized. And next we have the objective evidence concept. Always there are going to be evidence and the verifiable proper documents are going to be important for validating all their transactions. Next, we have the concept of conservatism. We have various conventions apart from the concepts. So, this is the conservatism. So, all the profits and the revenues are not anticipated. But, however, they have to be properly safeguarding all their expenses. So, when uncertain period, then unnecessary expenses can be made as a provisions and made all known expenses and losses which are going to be certain and the estimation and the treatment can be made so that the valuation of the assets are going to be made with the help of the provisions. Next we have the consistency concept. So the conventions of the consistencies as all the accounting methods and the concepts that are being followed, the rules are going to be followed in consistency and for the every period. Any changes that is going to be made only through the proper intimation of the particular method that is going to be considered and the fair view of the financial position of the company. And next we have this accounting conventions about the disclosure, conventions of the disclosure. All the financial reports are to be properly disclosed and the fair view of the financial position and the performance are to be made. So next, various users of the accounting informations. Accounting are there. So first, the main foremost is to ascertain the operations of the profit and loss. So we have the operating profit and the net profit after the interest and the tax. The tax of the GST and other taxes that are to be suitably filed. Then after, the net profit has to be incurred and ascertaining the financial position of the business. So after preparing the internal external auditing, the final balance sheet and the income statement are going to be revealed. The proper financial positions can be revealed and keeping the systematic record. So properly keeping the systematic record of the business are also very highly essential and important. And next we are having the protecting and controlling the business properties. So the proper protection and validating the documents are going to be important. Facilitating rational decision making. So in this management accounting or the financial accounting, we have to properly imbibe about the decision making. Compliance and planning with the control operations. So the inventory control or the cost control or the important expenses that are to be controlled or to be planned. Compliance with the legal requirements. So the proper legal requirements are to be utilized and as per the regulations. So the financial statements are to be prepared as per the company law. Companies Act now being amended in the year 2013, and then after there are certain little changes that has happened in the accounting concepts in the basis of the company law. So this has to be followed. Apart from this, the new GST regulations has to be also followed, complying the legal requirements, making the informations being available to the various groups. So we have the various groups of users such as the customers, suppliers, the employees, the management, everybody are going to be very interested. So towards the government and other authorities are going to be very interested to know about the various financial performance. So the proper informations are to be available in the public domain after the final audited results are available. Evidence in the court in case of dispute. Some misappropriation in the accounts, some errors that has happened in the accounts that has to be properly settled. Any cases that are there. So the proper evidence should be produced in the case of the court in order to sort out the dispute. And then suitability of the memory and then substitute of the memory. Next we have the settlement of taxation liability. So the proper settlement, so the GST filing returns properly not available. So they have to be suitably settled. And then comparative study, the past year comparison and what is the profit or what is the expenses that are being incurred. Next we have the various sale of the when the happening of the sale of the business or new business are to be prepared. These are the some of the various uses of the accounting. And various users are also there for the accounting. Similarly, as stated earlier, we have the various users such as the owners. So the owners are going to be the very highly important so that they are going to be making the proper utilization of the funds for the operations of the business. They are very much interested to know about the profitability of the business and operations that has to be carried out in the next forthcoming years and the capital that is to be deployed, invested in the form of assets and liabilities. Then we have the management. So the board of management apart from the owners are also needed this data which is going to be helpful and for the various important decision making and council controlling of the organization. And then the employees needed their information so that how far they are being contributing towards the business growth. They can be knowing, and how the business bonus and incentives can be paid to them. Apart from this, various other external users are there. The prospective investors. So the company's investors, like the uh, individual investors who are attempting to influence their investment in the particular company. So they should be knowing about the past and present performance. And then the creditors who are being giving the supply of the raw materials of the goods and services, and the credits that can be offered. And then the government, so the proper filing of the taxation. For that purpose, the government is going to be needed. And then the companies, then we are having the consumers who are having to analyze about these current situations of the business. And then the final one, research scholars who are taking the past data, so that they are able to analyze and give the suitable business current positions for the business. Various advantages of the accounting are available. The first advantage is going to be of the completes and systematic records. So the systematic records are going to be there. The proper allocations of the accounting records and preparing the various documents are needed. Next is determination of the selling price. So the proper selling price has to be determined. The third is valuation of the business. So the proper valuation of the business, that is going to be in order for the valuation of the shares or the valuation of the assets that are going to be made. Next is the helps in business build, making the losses, arising out of the losses. And then they are going to be evidence, bringing the evidence in the court of law. And then compliance of the legal procedures. Next advantage is interfirm and comparisons can be made. And then the facilitating for the audit purpose, and proper effective management can be made here. What are the various limitations of the financial accounting? Apart from the various uses and the objectives and also the advantages, we have the various disadvantages, so that they are only recording monetary terms. The quantitative details are going to be only analyzed, and effects of the price levels, the inflation rate or the depreciation are not going to be considered. No realistic proper information, various due to this concepts of the accounting that has to be followed. The realistic information can be even hidden. And then the personal bias of the accountant. So the internal auditors or the external auditors are also going to be affecting towards the personal bias and preparing the misappropriations in the accounting. Permits the alternative treatment, lack of uniformity. So the general proper principles will not be followed. And then historical in nature. So only it is going to be reflecting the past transaction, and does not record the effects of the current, and does not record the effect of the various changes that are happening in the government. So various accounting transaction, for that purpose the step by step process is there. The first step, in order to make the recording of the transactions, we have this journal. So the journal is going to be the book of original entry, in which we are recording. The first step of the accounting is going to be recording the transaction. The first, or when the expenses are incurred, they have to be recorded. So this journal entry is going to be bringing the recording of the business transactions in the journal. So these transactions are going to be analyzed, so that they are going to be determining the account, in which account it has to be debited and which account has to be credited. So the journalizing is going to be the process of properly recording what are the entries to be debited and what are the entries to be credited. It is the systematic act which is being entering the transactions in the chronological order. The date in which the transaction occurred has to be recorded. At the time of the journalizing of the transactions, whatever accounting is going to be debited is being represented as DR, and credited is going to be represented as CR. This is the format of which the journal record of the transactions are being made. So in this format, the journal in the books of is going to be highlighted in the heading, after which there are various columns. The first column is going to be the date, then particulars. We have the LF, which is going to be the ledger folio, debit, the debit amount to be recorded, and then the credit amount is to be recorded. So the first column is going to be the date, second the particular name of the account in which the first is going to be written first, and then after which account to be credited, that is going to be recorded secondly, and the ledger folio, which is given the page number of the ledger. The next column of the debit is going to be writing the amount in which the debit amount has to be recorded, and credit amount has to be recorded. After which the recording, the next is going to be the classifying of the accounts, which is meaning the ledger. So the ledger is going to be considered as the book which contains the classification of all the accounts, which is laying down the permanent record of all the business transactions, which is called the ledger. What is the need and the importance of this ledger? In this ledger, they are able to know about the balances, the final closing balance of the books of accounts are going to be recorded, and gives the detailed and proper informations of each and every account. So after which they are going to be taken towards the next step of trial balance, and it helps in knowing about what is the amount which is going to be paid to the customers, and from which the amount is going to be paid to the suppliers, after which the trading and profit and loss account can be prepared with the help of the ledger. Various advantages of the ledger are there. All the accounts are going to be separately opened in the book format. So here after the ledger, they are preparing with the, after preparing for the each and every account. So they are preparing the trading and the profit and loss. A balance sheet is also going to be prepared from the help of the ledger, and all other informations can be easily obtained from the ledger. So this is the format of the ledger, in which there are two sides, which is called as, first left side is the debit side and the right side is going to be the credit side. In the left side, they are having to record the debit transactions, that is the date, particulars. JF is the journal folio, the page number from which the journal entry is going to be posted in the ledger, and the amount. Similarly, in the right hand side, we have the date, particulars, journal folio, amount. So whichever account that is to be debited has to be recorded in the left hand side, and whichever account that is to be recorded in the credit has to be recorded in the right hand side. See here the left hand side, in which they are being represented as 2, and then the right hand side which is being represented as by. The rule of posting. What is this posting? So this word is going to be making the entry of the all the transactions. So the word to has to be used before the account which is going to be written on the debit side, and similarly the by word has to be used whichever account has to be appearing in the credit side. So it is not only necessary to write the account, but after the personal account, all the amount that has to be posted from the journal has to be also written, and then credit side same way has to be posted in the credit side. If an account has been debited, in the journal entry should be posted in the debit side of the ledger. If the account in the journal has been shown in the credit, they has to be shown in the credit side. Next, we are having the closing of the account. So when we are closing the account, after bringing all the debit items and the credit items, we are going to be balancing the account. For balancing the account, we have to, when they are going to be having the total, then after which side is lesser, we are going to be balanced. For which they are be able to make this word by balance C bar D is going to be carried down, or in this debit side, if it is a debit side balance, you have to write to balance C bar D, which is called as carried down. And when it is going to be in the credit side balance, which is going to be for by balance carried down, used for closing the personal account. When we are going to be closing the real account, Same way the word by balance carried down and then to balance carried down. From this we are able to close the accounts and then making the balance. Next, after the next step, we are being analyzing the accounts and bringing into the format which is being taken as called as trial balance. This trial balance is going to be giving what are the from the ledger they are going to be making the next category of debit entries and the credit balances of each and every ledger account is going to be preparing at the accounting period. And then this trial balance is going to be prepared in the form of a statement which is showing the separate debit ledger accounts and separate debit credit ledger account balances, and this is called as the statement of balance. This trial balance is a statement which is prepared with both the sides of the credit and debit balances of the ledger accounts and bringing the arithmetical accuracy. So both sides has to be equated. What are the objectives of this trial balance? It is to check the arithmetical accuracy of the ledger accounts and also to make any errors. If there are any errors, they can be easily located, and to facilitate the preparation of the final accounts, which is the trading profit and loss and the balance sheet. And various advantages of the trial balance. The advantages such as the balance of the it helps to ascertain the arithmetical accuracy and provides the ready reference of the balances. And if any error is going to be found out, they are going to be corrected, and in case of which the final accounts of the trading profit and loss can be prepared from the trial balance. And this is the format of the trial balance. So the first, then the heading they are writing about the trial balance of the so and so company as on the date. Date has to be mentioned, and this is the format in which from the particulars the name of the account has to be written, the ledger folio, which is the page number from which the ledger has to be taken and written, and whenever the balance is being final closing balance has to be taken. Then various other methods separately for the debit balance, separately for the credit balance is going to be taken. So the particular ledger folio, debit balance, particular ledger folio and the credit balance are there. What are the various limitations of the trial balance? From the trial balance, they are only able to bring the arithmetical accuracy but not able to give the commitment, that is, the errors are going to be corrected. All the errors cannot be disclosed. Some errors can be hidden and they would not be disclosed, and this cannot be taken as a conclusive part. On the whole, the accounting is going to be bringing the various principles that has to be laid and a step-by-step process that has to be followed, from recording, classifying and summarizing all the transactions in monetary results and thereof. With this, I conclude the session. I thank the opportunity given by Bharat Institute of Higher Education Research. Thank you all. Thank you.